Hi there, welcome to Kneppy Invest. Today I'll be focusing or doing one of my favorite types of videos, and that is a technical update, looking at charts. If you don't like to look at charts, this is not the video for you, but I would recommend understanding how to read charts is an important aspect of every investor. I believe if you have no idea how to read a chart and you think it's completely useless, I don't think you are reaching your full potential as an investor. This is something I have corrected over the past 5 years. I don't think I am an expert at reading charts. I'm continually learning this great technique, and by really improving this technique on reading charts, I am improving as an investor. In this particular video, I'm going to be looking at 6 companies that I do follow quite closely, including Novonix. I'll be looking at the daily and weekly charts. When you look at different perspectives, you can actually read different things. So you might be bullish when you read or look at the daily chart, but then become bearish when you look at the weekly chart. And I probably would prefer to buy into a company that I am bullish both in the daily chart and the weekly chart, so looking at different time frames. So before we get stuck into looking at the charts for these companies, what are the other 5 companies I'll be looking at in this video? All 6 companies I do follow at two different extent. For instance, I do follow XTek quite closely, Alphabet, Novonix, and even Tyro. And the main reason I follow Tyro is because the share price has fallen off a cliff. So that brings us to another point, is these charts are interesting for different reasons. And the other 2 companies, Grange Resources and Calix, those charts for those 2 companies look absolutely stellar right now, not only for the daily, but also the weekly chart. So let's get stuck into the first company we're featuring in this video, and that is Novonix. First company I'm going to be looking at here is Novonix. This is the 1-year daily chart. And one of the things I'm looking for here is trend in the share price. And there's a few ways you can get the trend. One of the ways is just to look at highs. So if you're getting higher highs, higher lows, the share price is in an uptrend, or lower highs, lower lows, share price is in a downtrend. Also look at moving averages. The other thing I'll be focusing on here is volume. And when you see a rise in share price or rapid rise in share price on large volume, that is a good sign of a possible start of a new trend. And we saw that with Novonix in July and August last year. We had 2 pretty big spikes in volume on up days. And when I'm talking about spikes in volume, I'm not talking just 1-day spikes. I'm talking about over a 3 or 4 day period. And that was the catalyst for the re-rating in this company's share price. I'm not sure if it coincided with any news release from the company, but that was a catalyst for the re-rating in the share price. And it lasted about 4 to 5 months. And the share price rose from about $2.50 to a high of $4.50. And then in December last year, we saw the share price drop 33% in 1 day on fairly large volume. And that was not a good sign. You don't want to see that sort of share price drop in 1 day. Again, it coincided with no news. But since then, the share price of Novonix has been under pressure, because if you get to the next high of that $12.50, which was reached in January, it was lower than the December high. And then the next high, which was reached in April, which was significantly lower than the previous high. So we've had 2 lower highs in a row. We've only had really 1 lower low, because around about $8, that was sort of a nice little support level. As soon as the share price fell below that, that was a fairly good signal, strong signal. The share price had moved into a new downtrend. So the previous low was just above $4.50, which was reached in March of this year. The share price has started to turn down again. If the share price falls below that previous high we saw in March, that will be a negative sign. And that would be telling me with the new lower low, we've already seen a few lower highs, that the share price of Novonix has moved into at least a short to medium term downtrend. As we turn our attention to Novonix, a weekly chart, this goes back 5 years. And really from 2017 all the way to just after the COVID-19 financial panic, share price of this company was going sideways. But there was a little bit of volatility in there. The re-rating of the company's share price really did not begin until the midway or halfway through 2020, there was some excitement in the market about this company, and that was the start of the re-rating in this company's share price. It did last 2 years. We have seen a little bit of weakness working its way into the share price over the past 4 or 5 months, which we saw in the daily chart. But when we look at the weekly chart, it has pulled back, still in a nice uptrend. Looking at the weekly chart, share price has been going sideways over the past few weeks. A bit of volatility in there, but nothing to get too nervous about when you look at the weekly chart for Novonix. In fact, with decreasing volume over the past 4 or 5 months, what I'd be waiting for, if I was excited about the long-term potential of this company, would be an increase in volume. If we start to see an increase in volume and the share price starting to go up, that could set in stage the next short to medium term uptrend in this company's share price. And then the target would be share price reaching above $12.50, which would be a new all-time high for this company. Now let's have a look at Tyro, and this is the daily chart, 1-year daily chart going back to April last year. And really from April last year to November, share price of Tyro was going sideways until something happened in November. And what happens in November is usually AGMs occur in November, maybe a profit upgrade, a trading update from the company. But whatever happened in November was the catalyst for a shift in sentiment with this company. If you remember back to Novonix, when he looked at that daily chart, the catalyst for the re-rating or a new uptrend in the share price was high volume on updates. With Tyro, you had the complete opposite. You had high volume on down days in November. It was over 4 consecutive days, share price decreased on really high volume, abnormally high volume. And that was a really bad signal that the sentiment in this company had shifted. And that was the start of a downtrend in this company's share price. So if you're holding your shares at that point in time, that was a signal to sell out. And the share price just kept on dropping. So the share price around that point in time was above $4, or the day before that re-rating, and the share price was above $4. And the share price kept on dropping from the start of November all the way through to when the company released the half-year results. And again, the market did not like the half-year results. We saw a massive down day on huge volume, and that was another bad sign. There was a little bit of a rally on the lowering volume over the next few weeks, maybe next month and a half. Share price rallied from about $1.40 all the way to $1.80. But the reason why the share price rallied was would have been some investors out there who saw a massive decrease in share price over the past 4 months, who saw a possibility of some value here. So this was just buying into a falling knife. And the share price has started to decrease because there was no strength in the buying of those investors. And the share price has now fallen below the previous high we saw in February. So that is a bearish signal. So right now, share price of Tyro is in a well-defined downtrend. It's just gone through a support level, the previous low. So a new low has been reached. At this point in time, no interest in the share price, even though it's at $1.38, significantly lower than it was only 4 or 5 months ago. So even though you might see some value in this company right now, maybe you're a long-term investor, you think 4 or 5 years this company is going to be valued way more, you still can just be patient. Wait for a shift in sentiment. Wait for the trend, the short-term trend in this company to change. So now let's have a look at the weekly chart for Tyro, and maybe we can see something different. Maybe it is giving us a buy signal. And when I look at the weekly chart for Tyro, I see nothing to get excited about here, apart from the fact that during the COVID-19 financial panic, share price of this company almost reached $1. Did it fall below $1 for a very brief period of time? Yes, it did. So that was the low in this company's share price. But there is no trend at all in Tyro payments. The high in the share price is around $4.50, which was reached just after the company IPO'd, which was in late 2019. And the share price has tried to reach or get above that level twice in the past 2 years and has failed. So right now, just looking at the weekly chart, nice downtrend in the share price. Share price is still dropping, and there is a potential the share price might get towards $1, which could be an interesting potential interesting buying price for this company. But at this point in time, no trend in the share price. When you look at the long-term chart, weekly chart, no reason to get excited about this company right now. The only reason you might get excited is if you're a long-term investor and you just don't care about the share price. You're just looking at the valuation. That's the only reason you'd even consider buying into this company right now. Now into Calix, and I saw the valuation of Calix was well over $1 billion. And look at the financials of this company, not much revenue, probably not even profitable, operating cash flow. So it's all about the story. It's all about the potential of this company. Don't even know what Calix does. They have something to do with environmental stuff. So that's one of the reasons why I think there's a little bit of hype in this company. So sometimes you don't have to know what a company does. All you have to do is follow the trend. And the trend is up with Calix when you look at the daily chart. So this is the one-year daily chart. Share price has gone from $2.50 to $9.50 in the last year. There has been one period of time when there's a little bit of weakness. That was the start of this year. Share price did drop all the way to almost $4.50 from $8, but the uptrend was still intact at that point in time. So nothing to get concerned right now. If you are a shareholder of this company, share price has almost, or has just come off the all-time high at $9.50. The one thing I'd like to see is increasing volume during this period. That's one thing that is missing. We're not really seeing increasing volume. The reason I like to see increasing volume is that would be telling me fund managers are getting excited about this company. And that's the one thing I want to see is fund managers getting excited, because they are the ones who will inevitably drive up the share price over the medium to longer term. As we turn our attention to Calix's weekly chart, it goes back to November 2019. From November 2019 to the start of 2021, share price of this company was going sideways. And then in 1 week, in fact, it was a couple of weeks, in the start of 2021, we saw the share price increasing on massive volume. In particular, there was 1 week where we saw abnormally high volume. Not sure if there was some news released by the company, but that was the signal to take a position in this company. Because whenever you see high volume coinciding with share price increasing, that is showing you there is significant strength in the movement of the share price. Not only that, the share price moved to new all-time highs, which is really important because that means there's no resistance moving forward. And the share price just can keep on increasing. And that's exactly what Calix's share price has done since the start of 2021. It's increased from just above $1 to a high of $9.50. So this company has been a significant wealth winner for those shareholders who have held in for the last 2 years. Next company I want to focus on is XTek. This is a small cap company whose share price has been under pressure over the past few years. We able to see that when we look at the weekly chart. This is the daily chart over the past year. And you can see the share price falling from about 60 cents 1 year ago to a low of about 16 cents, which was reached in February. But the share price has turned around. Sentiment is starting to shift. And that shift in sentiment is or coincides with an increasing volume as well. And the reason why the share price has more than doubled in the past 2 months is because this company has received about 3 to 4 urgent orders for their armor product. So the market is getting excited about this influx of orders, these urgent orders. The only question I have is how long that tailwinds or those tailwinds are going to last. But definitely a shift in sentiment. Just by looking at the daily chart, share price has more than doubled, and we've also seen significant volume come in. And when we look at the weekly chart, you'll be able to see that significant volume in the past week. As we look at XTek Weekly chart that goes back 5 years, nothing to get majorly excited about here. Share price has reached a high of almost $1 in 2019, but COVID-19 has not been good to these sort of companies. This is a defense company, and the share price did reach that low, multi-year low of 16 cents towards the end of February. And leading up to that low, we saw decreasing volumes. The market was not excited about this company at all, but that has really shifted or changed over the past 2 months. And in fact, the most recent week was a record volume week for this company, or at least a 5-year high for this company. The other thing you'll notice is if you go through this last 5 years, we have seen a general increase in volume during that period. but definitely a shift in sentiment when you look at the daily chart. The only question is, because of the amount of shareholders who have bought into high prices over the past 5 years, there will be a lot of resistance moving forward for this company. So that is the one major negative thing about XTek moving forward, is the amount of resistance that's just in the system. So even though the share price right now at 37.5 cents is at about we'll say a 5-month high, I would prefer it to be at least a 6-month high, preferably share price to be a 1-month high, which means there'd be less resistance moving forward. Now, the good thing is the amount of volume that is coming in, which is gobbling up all that supply of those shareholders who want to sell out of this dog stock, because the psychology of investors who buy into companies who then see the share price fall, they automatically think that company as a dog stock. And there's a lot of those investors in this company right now. So we need to see those sort of stale investors be cleaned out of the system before I think we can see a sustainable increase in this company's share price. But the last 2 months has been really, really exciting when it comes to the share price increasing on really good volume. And if these urgent orders continue for their armor product, I think there's still considerable upside for this company, particularly because the markup and the valuation of this company is still really low. Now onto a company that I almost bought in at 20 cents quite a few years ago. Our share price went sideways for a long period of time. So initially I thought that was not a bad decision, but then we've seen the share price really take off over the past year, or about 15 months, and it's gone from 20 cents, maybe a little bit more than 20 cents, up to a high of $1.44. So a nice looking chart here, particularly over the past 4 to 5 months. Share price has gone from about 55 cents to that high of $1.44. So nice positive momentum in the share price. Our share price has really taken off during that period. The one little thing or negative thing I'd probably say about Grange Resources is when you look at the iron ore prices, I think Grange Resources share price has increased a little bit more than probably what you would expect just by looking at iron ore prices. So a lot of hype in this company right now. A lot of people think this is the cheapest stock on the ASX. When I mentioned Phoenix was the cheapest stock, or could be the cheapest stock on the ASX, one of the replies was this company is really cheap, or the cheapest company on the ASX. So a lot of people think this company is really cheap right now. Again, Grange Resources share price will be correlated to iron ore prices moving forward. So if anything seriously happens with iron ore prices, maybe it falls all the way down to $50, this company's share price will be affected by that. So that's something you always have to take into consideration when you buy a commodity-driven company. But in saying all that, if you look at the weekly chart going back 5 years ago, I can see the share price was as low as about 12 cents 5 years ago. So one point in time here, forget exactly when, would have been like 2018. I was thinking of buying in this company at 20 cents, and it just went sideways for a long period of time. And the share price broke out towards the start of 2021, the share price moved above 30 cents. That was the time to take a position. I have learned a lesson in regards to this. I think it was South 32 when I bought into that company because I thought it had long-term, maybe long-term potential, short to medium-term potential. Share price went sideways for many, many months, and then it broke out of that consolidation period. That's the time to take a position when it breaks out during a time when the share price is going sideways. And that happened with Grange Resources at the start of 2021, just above 30 cents. And the share price has more than quadrupled since then. Last company I want to touch upon in this video is Alphabet. If you don't know who Alphabet is, that is just the name of Google. I'm not sure why they've gone the Alphabet route. There must be some reason, and that doesn't concern me. The reasons why they have a name of Alphabet, even though everyone probably refers to them as Google, even their ticker code is GOOG. Now, the reason I've included Alphabet in this particular video is twofold. The first reason is this is one of the companies I have on my watch list that if I see any significant weakness in the share price, I will become a shareholder of this company. I think Alphabet, Google, has significant long-term potential. The second reason I've put this company into this video is the share price just moved through a fairly strong support level. So that support level has now become resistant, and this is just on the daily chart. That support level was $2,520, which was reached 3 or 4 times over the past 4 months. And it's fallen through that on pretty good strength, on higher volume as well. The interesting thing about Alphabet was when they released their quarter results, start of February, the market really liked it because they were good results. And that's when we did see the share price high for this company at $3,040. So share price has fallen about 20% since then, and it still has potentially more to drop from here. So I do have a buy-in price, sort of an all-in buy-in price that was less than $2,000. So if I see the share price of this company fall below $2,000, even if the share price is in a downtrend, that's when I would consider taking a position in this company. I think I might just wait for the shift in sentiment if the share price does fall below that, because it could fall even further. So when you look at the daily chart for Alphabet, it does look quite bearish, particularly because it's fallen through a significant and strong support level. But when you look at the weekly chart for Alphabet, this goes back 5 years, share price has just been moving up through this period, which is understandable because this company just keeps on growing. Every single quarter, every single year, it keeps on growing. And I think there is still significant growth in the future. One of the reasons I think we have seen a pullback in this company and other companies on the Nasdaq and the New York Stock Exchange is because we have seen a significant run-up in the share price since the lows in the COVID-19 financial panic. And I think that was unhealthy because whenever you see that sort of significant rise in a share price, it's really healthy to see a pullback. It's very natural. So right now is that potential pullback we're seeing in Alphabet's share price. So that's why I'm becoming excited or more excited about these sort of pullbacks in these sort of companies that I think are long-term hold. The question is, how much further can we see Alphabet's share price drop from here? That's all I have for this technical update on Novonix and 5 other companies on the ASX and the American markets. So I'm pretty sure Alphabet is on the Nasdaq, could be on the New York Stock Exchange, but I'm pretty sure it's on the Nasdaq. It's one of the best companies, biggest companies in the world. And I still think, even though it is a pretty big company, it has a lot more to grow from here. If you have any questions about any of those companies, leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.